Welcome to Trading Techniques, the applications of trading by the market's own actions. This is the first in a series of videos that focuses on a specific trading technique. What to look for, how to assess what you're seeing, and then how to trade it. In this video, we will be looking at sell-offs, and in particular, the use of the upthrust. And we'll be looking at recent applications of upthrusts. And just as a general note, this is one of the very best Wyckoff trade setups to the downside. So you really want to know this. And as we move through the charts, we'll be discussing the all-important background conditions. You'll want to pay attention to these because it's the background conditions that pushes the odds of the trade setup. And this is true for any trade setup, but in particular, as we talk about specific applications with the upthrust, certain background conditions are going to push the odds of the trade setup in your favor. So you want to know this. And from this, we'll be able to see when upthrusts are most reliable and also when they're least reliable. During the course of the video, I'll be discussing the use of the Weiss wave and how it improves our ability to trade during sell-offs, and particularly how it helps us trade the upthrust. And we'll also be looking at intraday 5-minute tick charts and higher time frame charts like the 60-minute and the weekly charts. Before we get started, please be aware that this is my intellectual property. It is copyright protected. It is verified and protected by the DMCA, International Copyright Protection Act. Please use these materials only for your personal use. Do not reproduce them or share them on file sharing sites or distribute them in any way, even for free. And also, please be aware that we're not making trade recommendations or give investment advice here. This video is educational in nature, and neither I nor my company, TradingPsychologyEdge, can be responsible for your trading. So please note that trading has a very, very high degree of risk, and you're encouraged to consult a certified financial advisor before making any investment or trading decisions. So what exactly is an upthrust? The market makes a swing high, rallies up and makes a swing high here at A. It then reacts down to B, and after reacting, it finds support and then heads back up towards the old high here back at A. And it reaches the high of A and actually pushes up a little through it, but it can't follow through to the upside. Instead, price falls back underneath the high of A and closes under the high of A, or under A's high. That's the upthrust. That's the setup. We short at that point or sell short at that point, and our target is a drive down or through and below the low at B. We're looking for a new low, a lower low in here. All right, so let's take a look at an example. So here's a recent example, actually a couple of examples of upthrusts in a sell-off in the S&Ps last month. I'm using a 3,000 tick chart where each bar represents 3,000 trades rather than say 5 minutes or 3 minutes. It's done by the activity of trades. And then the volume is aggregated. Why do I use a 3,000 tick chart? Because